Hi, and welcome to a look back over 2022. Well, the trading year ends very soon as the holiday season starts to kick in. December is traditionally a short month for traders as markets slow down in the second half of the month, and I think we're volume-wise seeing a little bit of that already. So it's a good time to take a look back at the big stories of 2022. And we're going to start in February, and Meta platform's stock price dived in February. 2022 started with US stocks at all-time highs with optimism right up there, despite the emergence of rising inflation. But February gave us the first warning sign that it may not be an easy year for investors on the stock market, especially tech investors, as Meta Platforms, the parent company of Facebook, plunged 26% on missed earnings, which wiped $230 billion off its market capitalization and caused a bearish movement in the tech sector. At that time, earlier in this year, we were thinking, is this what we've got to look forward to all year? Sticking in February, however, the world was shocked when Russia invaded neighbouring Ukraine, a war on the very edge of Europe. Unsurprisingly, the implications of this conflict and potential for it to be a prolonged situation started to move the markets. Oil traded at over $100 per barrel for the first time since 2014. Western nations imposed sanctions on Russia, which also affected European economies. Another worry on top of what was now becoming quite clear was a serious situation with rising inflation. After Russia's invasion of the Ukraine, we saw some interesting movements in the FX market. In fact, we saw a dollar Japanese yen bullish breakout. The usual safe haven status of Japanese yen took a bit of a hit. Now, safe haven is something where investors buy during uncertainty, global uncertainty, particularly geopolitical concerns, hit markets and sell in the good times. But this changed abruptly, as shown in this chart of the dollar against the yen. There was a major bullish breakout followed an ascending triangle pattern. Now, after closing above 116, the market seemed to move higher and higher. In fact, it reached a high of 152 before correcting recently. Now, that was mainly due to the Bank of Japan intervention in the FX markets, and they did this twice. Once when it hit 146, and a second time when it moved above 150. So already at the start of the year, we were starting to see quite a bit of turmoil in the financial markets. Moving forwards a little bit in the year, and the Fed delivers the biggest rate hike since the year 2000. 2022 is almost certainly going to be remembered as a year when inflation bit hard. We already had the geopolitical concerns and issues in the tech stock markets, but central banks were forced to react to prices reaching 4-decade highs in the US, for example. Now, the US exports its inflation, so it became a global phenomenon. But it was also the pace at which this happened that surprised many people. In May, the Fed raised interest rates by 50 basis points. That's the biggest hike since 2000, but it wasn't finished there. In fact, it raised the rate by 75 basis points, each meeting in the next 3 consecutive months, and many others having to follow suit, including the UK and the EU. As a result of this, stocks suffered and the US dollar rallied. Inflation kept rising. A report in September put US stocks under severe pressure. In fact, they dropped the most since June 2020. The Fed increased by 75 basis points again in September, but at this point the focus seemed to switch to when the Fed would pivot. Was that rate of inflation, while still very high, slowing down slightly? That was perhaps the first little hint at a bit of positivity. But let's be honest, inflation has loomed large in the whole of 2022. Okay, so having fast forward already to September, we're going to stay with September. We're going to come back across the pond and look at the UK mini budget. So a new Prime Minister and Chancellor had been installed after a bit of a tumultuous time in British politics. However, things didn't change too much. They entered and spooked the markets with what can be described now as a calamitous mini-budget aimed at increasing the deficit significantly. This was a little bit of a surprise to many market participants, and the market response was quick and brutal. The Great British Pound and gilts were sold heavily Sterling against the dollar fell to levels that weren't seen since 1985. And in fact, the selling was so aggressive, it triggered strength in the dollar across the board. And it also led to the Bank of England intervening in the gilt markets. Now, after the shortest tenure as Prime Minister in recent history, Liz Truss, a new Prime Minister was quickly brought in. One of the first things Rishi Sunak, who in fact had been a previous Chancellor, did was almost completely scrap the mini budget. And in fact, the pound started to recover and local markets stabilised somewhat. Now, at the same time, and perhaps as a result of the heavy selling of sterling, in fact, this sudden increase in the strength of the US dollar, the euro against the US dollar dropped below parity. And this is one of the major events of 2022 in the FX markets. The euro dollar is a main pair on the FX dashboard, and this dropped below parity during the summer and into autumn. Now, parity is where €1 equals $1. In fact, the pair dropped below 0.96. That was the delight of US tourists visiting Europe, obviously, made their dollars go an awful lot further. However, below parity, the euro dollar found only buyers, and it bottomed out in October, as did the US equity market. And since then, we've seen a slight rally. But what else was happening at the time? So that was September. We're just going to jump over October and start with something November. And that was concerns over the US midterm elections. And the election results could have influenced the troubled US markets. We'll look at what happened in October shortly, but it's fair to say it wasn't a great period of time for the markets. Had the Republicans won more seats in the House and the Senate, there was real concern in the US that markets could slide further after that troubling October. But they didn't. And the results seemed to seal the bottom for US stocks in October. 2022 overall was a tough year for stock market investors. The Fed's aggressive tightening cycle and the strength of the dollar led major US indices lower. By October, they were down double-digit numbers. November brought some relief. We've already mentioned the midterm elections, and inflation seemed to slow and potentially likely had peaked. A December report actually seemed to confirm that fact. Stocks rallied in anticipation of a Fed pivot, although the Fed says it will continue. But the pace may well ease, and that's what triggered the rally in stocks and the US dollar sell-off. Markets are negative on the year, but they have been improving. There are still some concerns around the US tech sector, however, as in November, tech giants announced major layoffs. The economic recession expected in Europe and the UK, which probably is already here to be honest, may well still impact the US. Some people believe there's a much lower chance of the US going into recession, but it is still there. When these US tech giants announced their massive layoffs, concerns were heightened. Meta, we've already spoken about, had a torrid start to the year, announced they were going to decrease their staffing levels by 13%. Amazon said it would lay off 10,000 employees. And of course, after Elon Musk's rather random purchase of Twitter, they fired half of their staff. Now, this is an issue that's amplified following the summer, as the Fed has a dual mandate of price stability, hence we've seen their tightening monetary policy, and job creation. And if this trend continues, it may lead to a change in the Fed's current stance on monetary policy, and it may well have severe implications for financial markets moving forwards. Certainly something to keep your eyes on as we come out of the holiday season and into the start of 2023. So, in summary, it's been a year of turmoil, and some of the stories we've touched on there have been major players in the market so far. There have, of course, been many, many others, and this video could be exceptionally long because it's been an interesting year. US dollar strength has dominated. The Fed embarked on a tightening cycle like we haven't seen for a very, very long time, and other countries were forced to follow suit. The UK and the EU followed very, very quickly. Even the Swiss National Bank followed suit and ended their era of negative rates back in September. However, one central bank didn't follow this methodology, and that was Japan. And this divergence of policy led to one of the strongest trends of 2022, which was the decrease in the value of Japanese yen. What will 2023 bring us? Nobody can be sure. One thing we do know is it's likely to be another very volatile year. One last thing, all of us at FXOpen send you our season's greetings, and we wish you all the best of luck with your trading in 2023. That's it for this year. See you in the new year.